if it closes with above 56, then definitely it has to ride further upside. But Bank Nifty looks much more stronger as compared to Nifty as of now.
Okay, so that's with regards to where the Nifty and Bank Nifty stands. All right, the first question today is from Santosh, who wants a view on Natco Pharma. He's got 121 odd shares bought at 9-10 a piece and wants to know the outlook for this one. Saurabh, a very good morning to you. I'll come to you on this one. What's the view like for Natco Pharma?
Hi, good morning. See, the street was disappointed in the last quarterly earnings because the numbers were short of the management guidance, and not much clarity was given by the management guidance as to how the revenue will flow from the company where they envisaged in the past. As far as valuations is concerned, I think it is one of the cheapest available in the pack, and overall the business is good. In my opinion, it is a hold.
All right, we've got a first caller for the day. We've got Dheeraj calling us from Hyderabad. Very good morning, Dheeraj. How can we help you today?
Good morning, sir. My query is regarding Bharat Bijlee.
Okay.
So I bought 81 shares of Bharat Bijlee today actually at 3,100.
Okay.
Can I hold it for the next few days? There is a lot of correction, about 10% correction. And I don't know the reason, but I bought it as there is a lot of correction. So could I hold it or should I sell for the near term?
Yeah, okay. So you bought it looking at, okay, fine. All right. And what is the time frame that you have in mind? You said a few days, huh?
For the next 1 month, sir.
For the next 1 month. Okay, I think it's reacting to its earnings, where its PAT number is up only about 4% or thereabouts, and its revenue is up only about 5.4% or thereabouts. So, but not the largest company, just about 3,500 crore market capitalization. Brijesh, on the charts, since it's a decision to purchase based on the stock move today, and he's bought at the low point of the day, but what are the prospects on the upside?
So I think, as you rightly said, because of the earning, the stock is corrected and it is almost down with 12%. So there can be further damage in the stock. So I think this may come somewhere close to 2,900. So that is what the percentage term it looks like. So closer to 2,900, I think this may see some support because a few days before that was a level from where the stock has picked up the momentum. So I think on an immediate basis, if you can do some averaging at 2,900, and then I think if you can hold a position, you might get an exit opportunity. So I think he should hold, and close to 2,900, he should do some more averaging.
So that's the view with regards to where Bharat Bijlee stands. The next question is on Caplin Point. Rajesh Govda is writing in. His buying price for this particular counter is 1990 and he's bought 100 odd shares sitting on a profit of 13,000 odd rupees. Wants a short-term view on this particular counter. Brijesh, I'll stick with you on this one. What are the charts indicating for Caplin Point?
I think this stock can see another 10% kind of a movement on the higher side. 10 to 12% momentum is there. So 2,300, 2,350 is what I can see. So maybe it will take maybe during this week there's a high probability that 2,350 can be seen. So he should play for that move and ride the momentum.
So that's the view with regards to where Caplin Point stands. We also have a caller, Govind from Hyderabad, who's calling us. Govind, we've already answered your query on Natco Pharma, just 2 queries before this. So you can go back and watch the view on that particular counter. The next query is from Rajiv Sethi, who's writing in from Dehradun. He's holding ITDC 50 shares at 596 a piece, and his vision is from 2 years perspective, and wants to know if this stock is worth holding for the next 2 years or not. Saurabh, I'll come to you on this one. What's the view like for ITDC?
The company primarily works in the construction space and it is a very old and good company. Since we are bullish on this space, I think the numbers would be good going forward. In my opinion, it is a hold.
Hold on ITDC. All right. Kapil from Dubai is asking the next question and asking about Shakti Pump. His buy price is 910 and okay, I'm not really certain about the overall holding. I think what he's trying to say is that his average share price is 1,169 and he's not really given us a time frame. So let me go across to Brijesh on the charts. Brijesh, what's the view on the charts? It's down about 0.9% in trade today.
it looks a little bit weak. There has been a distribution, so I think this may slip further on the lower side. So there is a probability that this may come close to 700, 750 levels. So I think more damage will be there. Let it come to this zone of 700 or maybe close to 700. I think then this one should review it. Those is a demand zone previously where it has taken support and there was a good rally close to 1300 level. So, but now it is very difficult whether that stock will take support or not. On immediate basis, maybe another 100 points kind of a correction will be there. Close to 700, I think he should again review and understand what is the support if the market is taking. Like you need to review at close to 700 levels.
Okay, so that's with regards to where Shakti Pumps stands, and that's the technical view coming in from Rajesh. The next counter that we're talking about is Godavari Power and Ispat Limited. Sanjoy from Bengaluru has bought 50 shares at he's bought 50 shares at 100 shares at 188 a piece, so he's averaged out a bit. First he had purchased 50 odd shares at 192 and wants to know if he can buy, accumulate more at the current levels. His horizon is from a 3 to 4 years perspective. Should he go ahead and buy more at this level, Saurabh?
I think the company primarily deals into the steel segment, and we are bullish on the materials. We feel that the global economic growth will be higher going forward in the second half after the truce between the US and China. And we feel with the rise in the metal prices, the profitability of the Godavari Power will improve going forward. The last quarterly earnings were a bit negative. I mean, there was some kind of a degrowth. But in the future, we expect from the 3-4 year perspective that the company should do well. So it's a hold.
All right, so that's the view with regards to where Godavari Power and Ispat stands. Our next caller, Raj, is calling in from Hyderabad. Raj, a very good morning to you. How can we help you?
Hi, ma'am. Very good morning. Ma'am, I have IRFC shares at 177 rupees, 200 shares at 177. I just wanted to know whether I can add more shares at the current market price or I need to wait some more fall.
Okay, just wanted to understand, Raj, what's the time horizon that you're looking for to invest in IRFC?
More than 1 year.
More than 1 year. So you want a fundamental view on this, I believe.
Right, fundamental view. And I just wanted to know whether I can add more stocks.
Okay, got your point.
At the current. Yeah.
Okay, got it. Saurabh, I'll come to you on this one. He's sitting on a loss of 7,000 rupees right now, but he wants to average out and add more. Are these the current levels to add IRFC?
Won't recommend to add, but at the same time, the valuations have corrected in the recent correction. And now it is trading close to 3.5 book value. And the company is expected to grow at a good pace. So in my opinion, he can hold.
Okay. All right. We've got Satyan who's asking about Aurobindo Pharma. He's looking at a fresh entry for the long term. And Brijesh, I'm going to come to you on the charts. It's trading at 1,217, up about 1.4% in trade. But what are the prospects for the long term?
Okay, I think I would take a buy call because currently it is consolidating sideways. The trigger will follow about 1260 level, and I think slowly it will move up. If he can make an entry at this price and on a trade about 1260, he can be more aggressive and he can bet for 1400, 1450 on the higher side. That's a technical view.
All right, we've got our next caller, Pratul, is calling us from Jaipur. Very good morning, Pratul. How can we help you today?
Yeah, good morning. Good morning, and thank you for taking me on the show.
Our pleasure.
I have only 1,600 shares of BSE Limited, which I purchased at the rate of 2,600 about a year back.
Okay.
Now, the thing is that the share has been growing consistently. So at this point, when the record date for split is fast approaching, the bonus date is fast approaching, should I sell it before the bonus is declared? The bonus materializes, or should I sell it after the record date?
Okay. Do you have need for the funds, Pratul?
What did you say? I couldn't get it.
If you sell and if you book your gains of 75 lakhs, will you use it to deploy into other stocks or will you use it for some other purpose?
I'll reinvest it, possibly in BSE itself.
In BSE goes down. Okay, so it's a tactical play that you have in mind and you're wondering whether to book some profits and re-enter at a lower level. Is that right?
Yeah, there's some. Should I wait for the record date or should I sell it before the record date or after the record date?
I got your question. I got your question. But fundamentally, you're positive in BSE and you intend to hold for the long term. Is that correct?
Yeah.
Okay.
That's a good share. That's a good counter.
Yes, okay. And congratulations on the buy price and on the kind of gains that you've made. Brajesh, since it's a question on the relative short term and he's talking about corporate action and whether or not he should adjust his strategy accordingly, what is the advice that you would give in the short term?
I will be doing a profit booking at this level because the prices are extended very far, and there is a high probability that some profit booking will come into it, and this may go back to 6,500 level. So even to our clients, to somebody who is having a long position, we are saying it is wise decision to at least to take a part profits in this and to hold the position. But then sooner or later, I do believe there will be some profit booking in this. So it is advisable. It will be difficult to exactly point out from where the profit booking will come. But partial profit booking is advisable because 6,600, 6,500 is what I can look in the short term perspective.
And then, so if it does hit those levels, would you redeploy? And
Yes.
At 6,500 levels?
Yes.
Okay, all right. So that's a Pratul, hopefully that answers your question, and congratulations once again on having acquired BSE when you did. Bharat Forge is a counter that we're talking about next, and this is Rahul, who's writing in from Jaipur. He's bought at levels of 620 rupees a piece, and it's more or less where the stock price is at right now, and he's wondering whether to hold for the long term. On the fundamentals, Saurabh, what is the view on Bharat Forging?
Won't be able to comment on it.
You don't have a view. Okay. So let me take a technical view then. Brajesh, bought at levels of 620, not too far away from the current market price. What's the view on the charts?
So I think he's already bought the position, so he need to hold because the last week there's a good amount of appreciation, like 20% appreciation was seen. And it may take little time, but then maybe some positive bias can be there. He can bet for another 100 points, like 700, 720 can be the possible upside. Time frame would be difficult, but then hold should be the view.
Okay, hold is the view coming in on Bharat Forge where charts are concerned. Our next caller, Naresh, is calling in from Chennai. Naresh, a very good morning to you. How can we help you?
Yeah, good morning. So I want to know about IDFC First Bank.
Okay.
Yeah, I have about 45 shares at 65 rupees a piece.
Okay.
So I want to know about the long-term value, like 1 or 2 years.
Okay, 1 or 2 years. Okay, got your point, Naresh. I'll take this up with Saurabh. Saurabh, in terms of Q4 earnings, your net interest income was largely in line, but PAT did decline due to elevated credit cost. Plus, we've also seen Warburg buying stake in IDFC First. With everything around this, what's the view like? Should he continue to hold for 1 or 2 years?
Overall, on the banking sector, our view is quite positive. I think in the next 1 to 5 years, I think the sector will grow. The legacy problems have been solved out, but in case of IDFC, I think better opportunities lies in the banking pack. If he wants to stay with the IDFC, he can stay. The valuations are also comforting in the long term. The bank looks good, but if he wants to switch over to another counter, so I would recommend better to switch to ICICI Bank or maybe Indian Bank.
The latest update coming at the bottom of your screen, Naresh, in case you can take a look at the screen, the latest update, of course, is that shareholders of IDFC First Bank have rejected the proposal for a Warburg Pincus board seat after the acquisition of stake that they have made. So bear in mind that Saurabh's view is that perhaps you might be better off shifting to an ICICI Bank at this juncture. We've got the next question from Abir, who's writing in from Raipur in Chhattisgarh, and he's asking about Varun Beverages, which he's bought at a price of 518.5, number of shares is 200. Does he keep holding or does he sell and invest elsewhere? The stock price is currently at 503 or thereabouts, 504. He hasn't really given us a time frame. So Saurabh, let me come back to you on the fundamentals. Would you hold Varun Beverages or would you switch to something else?
I think they have a very good portfolio of the cold drinks and the chips, and they have also expanded to other geographies also. On the valuation front, the stock has always remained expensive, but recently it has declined. There is always a fear of a competition from the Reliance industry from the launch of Campa. But I think the industry will itself grow, and the competition, there will be a healthy competition. From 1 to 2 year perspective, I think it is a good company to hold.
Okay, so that's with regards to where Varun Beverages stands. Our next question is from Murli, who's calling in from Bengaluru. Murli, a very good morning to you. How can we help you?
Good morning, Mahima madam. Thank you for taking up my query.
Our
I
pleasure,
got
Murli.
I got Hexaware Technologies in March 25
Okay.
on 12th March at a rate of 773.
Okay.
And availed some this amazing dividend also, 5 rupees, 7 rupees per share.
Okay.
And I'm willing to wait for more than a year.
Okay.
What are the prospects? Or if you say no, I should sell and switch, what is the better option?
Okay, got your point, Murli. I'll take this up with Saurabh. Saurabh, in terms of Hexaware Technologies, where Q4 earnings were concerned, EBIT margins were largely maintained. Most segments' growth did slow down quarter-on-quarter basis, and overall the numbers were okayish. What's the view like there? And do you suggest Murli to switch to some other counter?
If you look at the IT industry, even the biggies have called for in single line digit growth, because there is discretionary spending is not happening in the US. The business is not that great. In fact, there has been some delays in the project implementation also. There has been some delays with the project awards also. So in my opinion, I think IT sector will not perform this year because of the bleak growth prospects. So in my opinion, I think he can switch over to some other sectors. The sectors where we are bullish is banking, capital goods, utilities, hotels, or maybe some banks also. So in the hotel segment, he can switch to Lemon Tree. In the banking, he can look to ICICI Bank or maybe Indian Bank. In the capital goods segment, he can switch look for KEC companies like KEC International or Kalpataru Power Transmissions. So he can switch his money.
Yeah, a few of those stocks reacting in trade today. Speaking of stocks that are up and about and have been in the recent past, Bharat Electronics is the name of the counter that we're talking about next, and money is writing in from Vizag, Vishakhapatnam. He's bought at levels of 290 rupees per share. The stock is in focus today also because of earnings, but he's making quite a bit of a gain of as much as 16,000 rupees for his 210 shares that he has bought. He's wondering whether he should book profits ahead of the earnings. What's the view, Brijesh, on the charts? A lot of people talking about the run-up that they've seen in the defense portfolios. Should you take money off the table?
Yeah, 100%. Because see, this is the extended move on an immediate basis. So if it's done some kind of a trading kind of a setup, it is advisable to take the money, because in the near term, whenever the index is also near to the 24,000 mark, and if by any chance if there is some profit booking in the market, this will come back to 330, 320 levels. So definitely one should take their profits, and maybe the good level to make a re-entry is 300. So whenever it comes back to 300, that's a beautiful level. But then profit booking should definitely be done at this level.
Okay. All right. We've got our next caller for the day. We've got Snigdha, who's calling in from Hyderabad. Hi, morning. How can we help you today?
Hi. Hello, everyone. So I just want to know if I could invest. I want to invest 2 lakhs on either Bharati Airtel or Power Grid. So I just want to know which share would be better to invest.
Okay. And this is a short-term perspective that you're seeking?
Yes. For 1 to 2 months.
1 to 2 months. All right. Brijesh, a couple of counters, very large cap counters, frontline counters, Power Grid Corporation of India and Bharti Airtel. Which one would you pick for a short-term perspective? So
Bharti has already moved up, and Power Grid is about to take some. But the point is, the opportunity is there in the Power Grid, but it is a slow mover, so it will take a bit time. And Bharti, there is a probability some profit booking can come. So given a choice, if I need to make an entry, Power Grid is something which I will take a call, and maybe from this level I will bet for 10-15% kind of opportunity. So that would be my take.
Ask you this then, if it is not these two, seemingly that is the case, and if you were to be asked about the top 100 stocks on market capitalization, which is traditionally looked at as large cap, which according to you would be the best pick for a 2-month time frame?
So exactly, because the Bharti specifically, I can see there is a slight profit booking and some correction is there. So I would stick with Power Grid. I think if I need to buy, I would be buying a Power Grid from a 2 months time frame.
Okay, so that's the view with regards to where these telecom companies stand. All right, the next caller, Himanshu, is calling in from Lucknow. Himanshu, a very good morning to you. I believe you have a query on Canara Bank.
Yeah, ma'am. Good morning, ma'am.
Good morning. Go ahead with the query, Himanshu.
Ma'am, actually, I am having 100 shares of Canara Bank at the rate of 102.90.
Okay.
I can hold for long, but meanwhile, what should I do? Should I exit if it is going to dip, or should I continue to hold?
Okay, got your point, Himanshu. I'll take this up with Saurabh. Saurabh, what's the view like on Canara Bank? Should he continue to hold?
Yeah, view is quite positive on the banking sector as far as Canara Bank is concerned. It is trading less than book value. The results were great. I mean, there was a good amount of profit growth and the NII was largely maintained. The book grew by more than 10-14%. So in my opinion, from the long-term perspective, it can be a good multi-bagger.
Okay. All right. Kantibai is writing in from Mumbai and asking about Tata Power and whether to buy it at the current market price. I believe he's got a relatively short-term view. Brijesh, would you buy right now? It's up about 1.3% in trade today.
Yeah, I think yes. Tata Power looks good on charts from the current level of just 411. It can go back to 440, 445 levels. Even the derivatives data is suggesting strength in this counter. So there is an opportunity. So I would take a buy call in this in Tata Power.
All right, Brijesh, I understand if you leave us. Thank you so much for joining us this morning and pleasure having you on the show as always. We'll be back on the other side to take more of your questions, and we've also got a management interview lined up. Kaynes Technology is the company that we're speaking with, so do stay tuned for that. Be back before you know it.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay.
Hello, good morning and welcome back to Ask Profit. We're in conversation with Mr. Jairam Sampath, whole-time director and CFO of Kaynes Technologies, to talk more about the results as well as what is the outlook for FY26. Mr. Sampath, good morning. Thanks so much for giving us your time today at NDTV Profit. Let me start off first, directly with the results. We've seen Q4 was expected to be strong to meet the guidance as well. Slight miss on revenue, but overall the EBITDA margin profile has been very strong. I just wanted to start off first with the segmental performance. The industrial business basically is now 55%, up from 48% in terms of revenue. Within that, if you can just talk us through and break us the products. I know smart meters is one of them, and you gave a few in the presentation, but just if you can talk us through what's the growth of this expected next year, and is it largely led by smart meters or some other products that we should know about?
Thank you for having me here. So fundamentally, the order book contains a lot of new value accretive orders in the industrial, electronic vehicle, aerospace and outer space, and also even IT and other areas. So of course, last year the performance was shored up by industrial field, which is basically smart meters. But this year we have quite a bit of orders in the automotive area also. There's a European customer that we have added. In the industrial, of course, our key customer who we acquired actually is Trameco, that continues. And of course, there are orders from new EV two-wheeler makers and also from the aerospace and defense, those kinds of areas. Even in railway, I think in FY26 we'll start doing some business in the Kavach area. Our product is almost near completion of development phase. So for the coming year, just want to clarify, we will grow our existing businesses, which is basically the ESDM businesses at about 60%. So that comes to about 4350. Plus we have acquired a new company in North America, which is August Electronics. And I think we'll be able to probably consolidate 6 months of their revenue into our business. And that will be somewhere around 175 crores or so. So if you take a consolidated company level basis, I think our business will be about 4525 or so. And looking at the order book and the kind of business that we have planned for execution, I think our margin will also expand this year in FY26 from 15.1% to about 15.6% at the minimum. So this is on the back of very strong order booking also. As you know, the monthly order rate has also gone up 20% on a quarterly basis, which represents about 80% on an annual basis. And the order book stands at about 6,500, 6,600 crores or so. And that's doing pretty well. Also, I think going forward, there are other orders also lined up in various sectors. And so for FY26, 27 and 28, you can see some fairly good revenue trajectory now.
All right, Mr. Sampath, you highlighted quite a few points there. So for next year, estimating revenue growth to be around 4,300 odd crores. It was roughly between 27 and 2,800 crores. That was what you said. You mentioned also on the EBITDA margin guidance, 50 basis point increase to 15.6% for FY26. So we got that as well. And order book, just had a follow-up question. You mentioned that you already are at 6,600 odd crores in terms of order book as of FY25. For the next year, how much of it is actually executable over the next year? Because you also have some order book that goes over 5 years as well. So when you mentioned that 60% of your revenue growth for the traditional business, do you already have the orders for that? And is that largely led by the industrial segment, or is that from automotives as well?
Yeah, so as far as the FY26 plan is concerned, we have, it will be led by industrial, electric vehicles, aerospace, and also railways. So aerospace and railways, of course, are better businesses for us because they are high-tech businesses and so on. And industrial, of course, revenues will continue to increase in the area of smart meters. As far as the guidance is concerned, what I said is 4350 is the number that we will have for existing clutch of businesses. We have acquired another company called August Electronics. So that will add another 175 crores, but that's half-year business for them. So you would have a total number of about 4525 as the number. And the new business that we have acquired is at a accretive nature in terms of EBITDA. So EBITDA also, I think you can see some a good increase. About 50 basis points is what we expect. We will see how much actually we get to.
And just want to take the point forward for a new the PLI component scheme that's been announced as well. Any kind of number that you can quote us, because we've already seen a few of your peers already announce capex for under this new scheme. Could you quantify what's your plan under the new electronic component scheme? I think it's a 22,000 crore scheme. What is the plan for Kaynes Tech regarding the same?
Yeah, so our two investments into PC board as well as OSAT were already covered by the earlier schemes of Indian Semiconductor Mission as well as the earlier SPECS 2.0 scheme. And we will try and see whether we can get some PLI done for the PC board, which is a component which is covered under the new scheme. As far as this round of investments is concerned, we already are well covered in terms of the capital subsidy. In case of OSAT, we get about 70% capital subsidy, state and central government included in the for the eligible capex. And similarly for PC board, we get about 60-65%, state government and central government included. So this year we are looking at making sure that these two businesses come on stream, and we start commercial revenues from the fourth quarter of FY26. Factory is under construction, so maybe between before September, I think the physical infrastructure will be ready, and then we need to give some 3 to 4 months time for the customers to approve the factories and samples, etc. So at this point in time, we are depending on approvals already received. So there are no pending approvals required. Maybe in future we will look at any expansion under those schemes.
Mr. Sampath, specifically, we asked you about, the order book specifically. You already have the orders for the growth guidance that you're giving for FY26 because it's quite executable over a longer term as well. But for FY26, to meet this 4,300 crores from traditional business, those orders are already with you at this point of time?
Yeah, so typically out of 6,500, close to about 60% of orders pertain to the coming 12 months. So obviously there is a few orders that yet to come in because some customers do give in orders only for less than 12 months coverage. So from that perspective, whatever is expected to be there with us is already there, probably beyond that. And so you can say that order book coverage is pretty much good.
You mentioned in one of our previous conversations that both, and you confirm right now that the OSAT, which is part of the semiconductor venture, as well as the PCBs, FY27 will be majorly the first full year of operations. So essentially, what kind of revenue can we expect from both these verticals? I think a longer term target is 8,000 crores for FY28 for you. Can we expect that the incremental business will slightly slower in terms of growth? How do we expect the traditional business and the contribution from these new verticals?
Sure, sir. So FY28, we had always talked about $1 billion, which has been our objective. So we think that dollar will be about 90 rupees, so 9,000 crores. And in that, the FY28, the contribution of OSAT and PCB was supposed to be about 1,500 crores. And the remaining 7,500 crores was supposed to come from the EMS kind of business, which I think we are pretty much on stream, and maybe we'll exceed those numbers. So as far as FY27 is concerned, we probably will do enough to make sure that at least minimum 1,500 crores of businesses will happen in FY28, maybe more. So FY27, we might reach the same, say about 1,000 plus 500 crores in these two businesses in FY27 itself. Well, FY26 is the evaluation time, and FY27 we see significant capacity utilization also, maybe between starting with about 30-40% and going up to about 80%. So let's broadly we say that half of the turnover that we expect from these businesses should start kicking in by second half. So roughly 1,000 plus 500 crores is what we can expect from new businesses, that is OSAT as well as PC board in FY27. FY28 maybe will exceed that 1,500 crores that we had reckoned earlier on. So we will come out with fresh calculations probably towards the end of the year after looking at all the orders and all the customers that have been onboarded and all that.
Because you already mentioned 1,500 crores from these new verticals, you already are doing 4,500 in your traditional business. So you're already there between 6 to 6,500 crores at the start of essentially FY27 for both businesses. Got the view. One final question. There's a couple of questions combining them. So one is the IoT, IT as well as the consumer side of the business that's still new for you, roughly between high single digit in terms of revenue. That is very close to the traditional EMS business, which a lot of companies do, which is high volume and low margin. Is that something different for you because you have focused more on high margin and low volume products? What is your outlook for this vertical going forward, and exports as well? That's roughly 10% of your revenue. Is the strategy more for export from India to geographies as well, or from, like, as you acquired August Electronics in Canada, so you will be addressing those markets from those acquisitions, and Sensonic as well in Europe? So any just a color, some color on that as well.
No, sure. So firstly, our IT, IoT and others contains only professional electronics, which is business to business kind of thing. It contains most of these server are high performance computing servers actually. So what you see there is not consumer, though we include consumers there, but consumer is almost minuscule, almost negligible portion of our business. Earlier on, we used to do some little bit of business in terms of ODM business, that is BLDC controllers and so on and so forth, which did have some consumer outlook. As far as the exports is concerned, exports is distinct from geography sales. So we are talking about India geography. India geography contains domestic and exports. So India geography exports would contain aerospace and some business in automotive and some business electric vehicles. And maybe at a later point in time, some railway business will also resurrect. So from that perspective, we expect the India geography exports to increase from current small single-digit number to a much, at least a double-digit number by the coming year. In addition to that, new businesses like OSAT and PC board will have almost a major portion of their business will be exports. And in addition to that, of course, there is these acquisitions outside of India. So that is called a geography. In our parlance, that's a geography business. That means you sit there and do business locally. So that may not be very significant in FY26, but then coming by FY28, 29, we would like to have geography outside geography business to be close to about, say, FY29, FY30 time frame, $300 to $500 million should come from outside of India geography. And then, of course, you will have $1.5 billion from India geography. So that's what will make this FY30 $2 billion mark.
Got that, Mr. Sampath. Thanks so much for joining in, giving us a whole host of views on FY25 as well as what's the outlook for the next few years. We look forward to our next conversation, but thank you so much for joining in today, sir.
Thank you. Thank you for having me.
So Alex, very interesting in terms of business as well as the management mentioned, but stocks are 56% from the end of February. It had a major correction at the time, but really strong correction. So it didn't give too much time for investors to get into this very interesting growth prospect.
An interesting conversation as well, very transparent on the outlook going forward. Thanks, Puneet, for that. And that last bit as well. Saurabh, before we jump into some of the other questions, I'm sure that you listened to the conversation as well. Any view that you have? And by the way, Ajit, thanks so much for joining in on this side of the show. Saurabh, very quickly on Kaynes Tech, would you be a buyer at this point based on what they've said, 60% revenue growth outlook in the traditional business itself in FY26?
Based on the company's guidance, the company looks good, and on the operational front, they are guiding of 60% kind of a growth. But in my opinion, I think, Alex, all the growth for the next 2-3 years have already been baked into the prices. The companies at the end of the day is doing 2,700 crore worth of revenue and about 300 crore of net profit, and the market capitalization 40,000 crore. In my opinion, it is too expensive.
Okay, all right. So that's a nice way to put it. Despite that 60% growth in the traditional business with a market capitalization of 40,000 crore, the question that you have to ask is, are you getting value for the business that you're buying at this point? Sure, the company is doing well. All right, let's take the first question on this side of the break, and this is on Crompton, which posted its results not too long back, and it's a shorter term question. It's from Suresh, who's writing in from Hyderabad. Can it be bought from the perspective of 3 months? And if I remember correctly, the earnings were bolstered by the acquisition that the company has made of Butterfly Gandhimati, and the stock reacted positively. There you go. So post the results, it moved up quite substantially. Ajit, the question is whether or not there is a tailwind for the next 3 months, and what is the upside that you're seeing on the stock?
Yeah, hi Alex. So yes, see, if you see the past performance, it's been almost like 4-5 years of volatile swings that the stock has been experiencing. Means from 500 to 250, and then again to 500, and again it reached closer to the lower band of the same. Now we are seeing sign of reversal. So let's say if somebody's view is having 3 months to 6 months, probably 380 to 400 something that the stock can attempt. So the risk reward is favorable, means we have a very strong base at 320, 310 area. So with that as a stop loss, 400, 420 positionally can be considered for next 2 to 3 months target.
Got our next question on State Bank of India from Sandeep, who's calling us from Bengaluru. Very good morning, Sandeep. I think you've bought at levels of just under 800. What is the view that you're seeking?
Hi, Alex. Good morning. Thanks for the call. Just a very quick question. Given they have an annual general meeting tomorrow, where they have a proposal about fundraising for $3 billion, I just want to understand how the impact could be in the sense it's going to be looked as a positive, or how is it?
Actually, before I toss or ask this question to Saurabh, and I'm pretty sure that he's going to echo this, for a bank the size of State Bank of India, this is not very large amount of fundraising. And also, if you look at the capital adequacy ratio, you will notice that it has fallen. And it is something that they need to bolster. Generally, you need to have a certain amount of tier 1 capital in order to have a certain level of growth. Saurabh, is that the perspective that you should have with State Bank of India? And do you think that it's going to have a material impact? Would you hold on? Would you buy more at this point?
You're absolutely right, Alex. You look at the balance sheet of the SBI, they have about 5.5 lakh crore worth of deposit and about 4.2 lakh crore of the loans advances. I mean, for such a heavy bank, bigger bank, 3 billion is nothing worth. I mean, nothing. But it is essentially happening because of the capital requirements. So nothing to worry. I think you should keep on holding.
Keep on holding. Is there potential upside that you have in mind? Of course, State Bank of India not seeing the kind of loan growth that it has seen in past years. Does that pick up? Because there has been a little bit of caution in the unsecured space.
I mean, the management has guided that they are quite. They are not afraid of their unsecured book. They are well covered, and of course, the balance sheet size is too heavy, and to grow at a higher pace at this pace is quite difficult. So I think one should keep in mind that with the investment in the companies like SBI, one should be seeing growth of 12 to 15% a year.
Okay, fair point. And buy these companies also from the perspective of distribution of profits in the way of dividend, right? So keep one eye on that as well. Sandeep, thanks so much for calling us today. We've got a next question from Prakash, who's writing in from Chikmagalur in Karnataka, and he's talking about RCF, Rashtriya Chemical Fertilizers, which he's bought at a price of 195, so slightly elevated levels that he's bought it at. And he's wondering what the prospects are going forward. I'll come to you, Ajit, on the charts. What are the prospects on the charts?
So, Alex, after this sharp correction from the record highs from 240 to roughly around 110 levels, we are seeing gradual recovery. The stock has reclaimed major averages also on multiple time frames. So, it seems stable now, but for his level to come means the stock should decisively break 160 level and hold above the same. Then only we can see, let's say, around 180, 85 levels. So once it reaches closer to his buying price, he should review his position or at least, book partial losses and maintain a trading stop at 170.
Okay. Speaking of losses, this is quite a blow to take. And I'm talking about Protean eGov. And this is a question from our viewer, Vipul Sheth, who's writing in from Ahmedabad. He's holding 100 shares at a price of 1306. The stock is down at lower circuit today, so no buyers in the stock, and so it's taking quite a bit of a beating. And the reason, of course, is that there has been a cancellation or no extension of a contract with the Government of India for its PAN 2.0 project. It has sent out a statement. It said that it's no longer in contention for that project. It has been eliminated from the RFP race, and the government had plans to overhaul the PAN and TAN services under PAN 2.0 with a 1,440 crore budget. And despite earlier confidence, Protean is now completely out of the running. By the way, there's an Equirus note on the company. It says that this is a material negative as the PAN services contribute as much as 50% of the revenue of the company. FY26 impact may be muted, and it expects a 75 to 100% collapse in this revenue stream over the next 2 to 3 years, and a 35% decline in the FY27 overall revenue. So it's a material negative. Unfortunately, this has come out of the blue. It's not something that a lot of people would have anticipated. So the question is, Saurabh, I would think that you would try and get out when you can. But what is the strategy that you would employ?
I think all the reasons you have clearly stated, Alex. In my opinion, I think the valuations will get a reset on the lower side, and there is much room for the stock price to go down. So I think as soon as you can get out from the stock, it would be better.
Okay. Is there any point, Ajit, asking you about technical levels? At this point, there are no buyers in the stock. So, but what strategy would you employ?
So Alex, since listing, the stock has been trading in this band roughly around 1240 to 1450, 1480. And with this kind of a move, a gap down start followed by this down circuit, it has ended this consolidation on the lower side. So this is not a good indication. Means as per the range itself, probably close to around 950, 900 is something the stock might test in the days to come. So please avoid any bottom fishing as of now until we see any sign of reversal.
Yeah, okay. So that's advice for anybody that's looking at the price downtick and wondering whether or not to buy. This is the definition of a falling knife, and avoid at all costs at this juncture till some clarity emerges, as Ajit has pointed out. A slightly broad-based, actually before we get to that, Raju is calling us from Andhra Pradesh. Very good morning, Raju. How can we help you today?
Yeah, hi, good morning.
Please go ahead with your question.
My query is about Electrosteel Casting.
Okay.
I want to take a fresh position in this counter. It seems very good as per valuation. So I want to take a fresh position for a long-term view.
Okay. What valuation metrics are you studying? And this is a stock that is about 7,000 crore, 6,800 crore market capitalization. It is in the pipe space. So you've obviously done your reading. If you're talking about the valuations, what metrics are you looking at, Raju?
Price to book, it seems attractive, 1 point something.
Yeah, 1.1 times. All right, let me take this question to Saurabh. Saurabh, trailing price to earnings also not very expensive in the larger scheme of things. Would you suggest that it's a good company to look at from the long-term perspective?
I mean, the company is good enough, and from the valuation perspective, as you have stated, it's trading close to book value and 9 times to its trailing earnings. Overall, we have a view that the metal industry will grow and the activity will improve going in the second half. I think the company may get benefit of the higher prices going forward also. So I think he can go for a buy.
9.5 times trailing price to earnings when the industry is trading significantly higher. Raju, good spot, and wish you luck with that investment. And we'll check back with you later to see whether it makes sense for you. Maybe you can call us back and see what the view is. Harshit has got a pretty broad-based question for you, Ajit, and he's got a time frame of 7 to 10 days, which is a relatively short one. And he's got 50,000 rupees that he's looking to deploy. And I think there are a lot of people who are sitting on the sidelines and waiting for the bottom, but have missed out on the opportunity on account of the move over the last couple of weeks in particular, right? Last week in particular, you're talking about the benchmark gaining over 4% and the broader markets gaining over 5%. So where would you deploy?
So Alex, you rightly mentioned, means if you see that last week also all the sectors were ended in green and the broader markets were up in the range of 79%. So obviously it seems like that, I've missed out the opportunity. But if you'll see on the stock specific front, you still find decent opportunity across the board, especially in the banking, which was sitting on the sidelines. So let's say Axis Bank, which is currently quoting at 12.15, is something that one can look to go long if the view is very short term. And 1180 should be a stop loss and 1280, 1300 should be a target area. Another safe bet, which seems stable to me, and as a disclaimer that we have recommended to our client of late, is GAIL India. So after the recent correction, the stock has witnessed a fresh breakout today, and we are anticipating that close to around 198 to 200 is something the stock might test in a week. So here also the risk reward is favorable, means with the stop at 186, he can invest for next 7 to 10 days.
All right, so that's the view on which stocks you can look at. I missed taking this earlier. Premier Energy is in focus on account of its quarterly earnings, and this is a question from Santosh, who's writing in from Chennai, and he is holding since IPO levels. He's asking whether he can accumulate both from a short-term and a long-term perspective. Saurabh, on the fundamentals?
Well, the company has put up a good show and they are quite optimistic about the higher growth going forward. But on the valuation front, I feel that the stock is quite expensive. So in my sense, it should be avoided.
Be avoided. All right. By the way, take a look at the update on the bottom of your screen. That is the latest update on Vodafone Idea. The government has rejected the plea that was made recently by the company. We'll circle back and get you the implications of that in just a bit. It's time to hit the rapid fire round. And this, by the way, is where we take as many questions over the span of 2 minutes. The first question is from Suchit Joshi, who's asking about Bharat Dynamics, bought at levels of 1841.66 rupees. He's asking whether he should book profits at this point. Ajit, on the charts?
Yeah, book profit and keep on trading stop losses in all the different stocks.
Yeah, he's already lost the opportunity. It's trading flat. All right. Natco Pharma is the name of the counter. 121 shares, bought at levels of 910. What is the outlook going forward? The stock is up 3%. Ajit?
Recovery expected. Hold 850 stop loss, 910 target.
Okay, ITC, should you buy it right now? Ganesh wants to know. On the fundamental, Saurabh?
Buy.
Buy. All right. Okay. ITC Hotel. Okay, there's another question from Dhananjay who's asking about ITC Hotel. Is this the right time to buy? From the hospitality pack, Saurabh?
It's a buy.
It's a buy. Benson wants to know about Chennai Petroleum. He's got 18 shares at a price of 624 and he's holding based on the fundamentals. Should he hold or should he switch to something like an IOC? Saurabh, on the fundamentals?
I would recommend to book profit and won't recommend to switch.
Okay. Transformers and rectifiers. Long-term view is being sought by Lavanya, who's writing in from Chennai. Would you buy Trill at this point, Saurabh?
Yeah, you can buy.
Okay. Ambuja Cements is the name of the counter. Short-term outlook is being sought. Sunita from Hyderabad is asking. She's bought at levels of 502. Is in the green. Ajit?
Hold, maintain a trailing stop at 550 and 585 target.
Okay, UCO Bank is the name of the counter. Partha from Kolkata is bought at a price of 49 rupees a piece, and so is seeing a loss right now. He's a long-term investor. Should he hold or exit? On the fundamentals, Saurabh?
Switch to Maharashtra Bank.
Okay, Aswini from Chennai is holding Eternal at a price of 271. He's looking for a time frame for the next 3 months. Should he hold or sell? What's the view, Ajit?
Hold, 225 stop loss and around 270 review.
All right. That brings us to the end of this edition of Ask Profit. Lots to talk about in terms of news updates. Saurabh as well as Ajit, thanks so much for joining in. Pleasure having you on the show. Do stay tuned. Up next is Know Your Company, and this is NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
headlines you start your day with.
Hello and welcome. You're watching KYC. I'm Harsh Saita and with me is Anushi Vakharia. What we're going to do today is we're going to speak with Inox India and we're going to try and break this one down. Very interesting business. That's one reason why we've taken it up. Very low debt in terms of the relative capex that it does versus the debt that it takes up is nearly zero. And it's a business with a decent, deep kind of moat. As I was speaking with analysts, and what one analyst told me is that the number 2 player is 1/6 the size of Inox India, and therefore just the size of Inox India in terms of the business that it does, it has in a certain sense a very deep moat, a pure make in India story. Okay, but the risk of course is therefore tariffs. Anything to do with export could impact the numbers for Inox India. Any kind of headwind with regard to export, whether it's freight, whether it's tariff, all of those could well impact the business as well as the top line and margin for an Inox India. So that's point number 1. The second point is that with such a large market share, you could see market share erosion. What is the risk of that is what I'd want to ask the management as well. The third piece is the working capital outlook. The working capital requirements have gone up. Your cash flow from operations haven't kept pace with profit growth. Has this really peaked? Is there going to be an adjustment in FY26? Is another question which I'd want to ask. The kegs business. Now this is where some good chunk of growth is going to come from. I'm going to give you some numbers. H2 of FY25, they've sold 50,000 kegs. The guidance for FY26 is so strong. 3 lakh to 4 lakh kegs is what they're planning to do in FY26. I want to understand what makes them so bullish. Does order inflow and business growth outside of kegs also add up? And what's the risk that if kegs would miss in terms of numbers, what is the downside risk to both top line as well as margins? They've guided for an 18 to 20% top line. I want to understand what the risk of that is. And the last one, what are they currently investing in? Where is the capex going? Where are they going to lever their growth outside of their conventional verticals? That's what I'm looking for when I'm looking at this company. It's a niche company in a very niche space, and that's why this one really stands out for us. Let me start off by describing what the company does. It's a manufacturer of cryogenic equipment. I'm going to double down and probably try to over explain what exactly is this equipment. It's used mainly to handle and operate material at extremely low temperatures. So just think about operating, transporting, storing material, whether it's gases or liquid, at sub minus 150 degrees. That is some seriously low temperature. You would require high quality, high precision, solid equipment to actually do that. This is where the business moat comes from, and Inox India is one of the very few which has the capability of manufacturing such equipment. Who uses it? Let me talk about that. One is it's used in storing and transporting LNG, liquid hydrogen, liquid oxygen, liquid nitrogen. So where all are they used in terms of the verticals? One is medical, something like storing blood, biological samples, cryosurgery, as well as liquid oxygen. All of those used in the medical space. These are just illustrative. The uses are maybe a few more than these, but broadly just giving you an understanding of what it does. Transport, LNG, hydrogen powered vehicles. That's where some of this will be used even going forward. Food, something like rapid freezing, preservation of food, green energy, development of hydrogen power. Those are some use cases where some of their equipment is getting used. Now let's talk about Inox India in particular. Inox India has 30 years of experience. It's a leading cryogenic tank manufacturer in the world, one of the leading ones. It has solutions across design, engineering, manufacturing and installation of these equipment. It also does maintenance of these equipment and systems and therefore it actually takes care of not just the one time but also the recurring thereafter. It has 3 divisions currently. One is the industrial gas division, which manufactures, supplies and installs cryogenic tanks. It enables storage, transport and distribution of industrial gases. LNG is the other piece which it does. Manufactures and supplies and installs standard and engineered equipment for LNG storage, distribution and transportation. It gets a lot of its orders with regard to LNG even from India, given the India requirement. And then you have Cairo Scientific, where it provides equipment for technology and intensive applications. Cairo Scientific is what has led the numbers in this particular quarter. So Cairo Scientific is a slightly nicher segment where you may not have as many players and there is a far heightened amount of precision which is required. Let's talk about products now. Industrial gas. The use case is bulk storage, transport and vaporization. Again, some of this may sound repetitive, but what we've tried to do is try to break it up and present it as concisely as possible for a lucid understanding. So bulk storage, transport, vaporization. What are the products available? Tanks, which are available for storage and transport. Vaporizers and piping is also what they sell, and oil and gas equipment. So these are their 3 products in the industrial gas space. In the LNG space, they are providing products for aiding storage and transport again. LNG infra is the other space in which they operate, where they give industrial applications and LNG equipment. So some of these are use cases, some of them are products as well. Then there's Cairo Scientific. This is used for clean energy, advanced technologies and turnkey solutions. So what are the products here? Satellite and launch facilities use some of the products which are provided by an Inox India. And then there are propulsion systems where some of these products are used for the purpose of satellite launches, etc. You're talking about thereafter sustainable industrial packaging. Here it is used in containers and kegs. Kegs is the new business or the business which they started in FY25. Industrial containers, beer kegs. Let's talk about Cairo Bio. This is used in dairy organizations for animal husbandry, cattle breeding, infertility clinics for humans as well. Pharma companies use it even for biosamples. When you're collecting and when you're transporting biosamples. What they do in terms of products here is containers and tanks. A lot of the products that they do is containers and tanks. And this is the last piece, cylinders. Use case, they allow for storage of gases. So this is how it really stacks up in terms of product as well as in terms of use case. We hope we've tried to do the best we can to try and get you an understanding of exactly what this company does, because it's in a very niche space, right, Anushi? You want to add anything with regard to the product line?
So, you've given a very precise description about how the products are shaping up the 3 main divisions. It's, the cryo division, which is important for the company. A lot of key growth expectations that we are seeing is stemming from this division. So, let's do and walk through the numbers if we can. I'll start.
Let's do that.
Yeah. So if you're talking about the revenue, now it's been a stable sort of a picture that we are looking at in terms of where the growth is concerned. So FY23-24, we saw about a 17% or a 23% of an odd growth. In FY25, while we did have a slow start to the year in terms of where the 9-month picture was concerned, it was the fourth quarter in particular wherein the revenue growth was back at it at 16%. The company ended with a 16% of a growth. Margins have majorly remained stable in the 21 to 22% of a range that we are looking at. And if you talk about the profit growth in the last 3 years, taking the CAGR of that roughly stacks up to 20%. So it's an overall decent sort of a picture that we are looking in terms of where the income statement is concerned. Again, order backlog is interesting for the company as that would provide the visibility for revenues going forward. At the end of March, the order book stood at about 1,356 crores. Order inflows were up around 28% for the year. Do note that the company had marked a couple of large order wins in particular. FY26 remaining important in terms of where the cryo division is concerned. So overall picture on the order backlog side and the income statement side remains on the healthier side, right, Harsh?
Absolutely. So it's looking good. What I'd want to understand is how much of this component in terms of top line growth going forward will get added by the beer kegs business.
Right.
And how much of that are they able to deliver? Because they've spoken quite a bit about it. Q1, Q2, Q3, all the con calls mention it. Q4 also mentions it. But we've not seen that translate to numbers. So something that we need to really watch out for. Let's talk about balance sheet. Not too much here. I'm not going to go into detail because you've got very, very low amount of borrowing. It's a 10,700 crore odd market cap company with almost zero debt and a decent amount of cash balance. So definitely a thumbs up on our KYC metric here. Let's talk about cash flow as well. Anush, you want to take that up?
Yeah, so in terms of where the cash flows are concerned, around 122 crore of odd. So at the end of FY25 is what we are looking at. Majorly no changes from the previous year. What we are seeing, net cash flows almost negligible at the end of this financial year. Interesting would be to understand the working capital of the business, because if we break down the cash flow from operations, we have seen a pickup in terms of where the receivables are concerned. There's an increase over there and also on the inventory front. So management commentary on how there would be improvement in cash flows and the net working capital cycle is something that we should be focusing on, right, Harsh?
Yeah, we've seen that. We saw that kind of uptick. And see, I mean, they've maintained it at these levels when I'm looking at FY22 versus FY23 versus FY25. Actually, FY24 was a year when those numbers compressed a little bit. And that's why you're seeing a little bit of that impact coming in with regard to FY25 cash flow from operations per se. But otherwise, we've seen a decent trend with regard to cash flow from operations. But let's talk about the other metric, return ratios, and this is where it gets really impressive. The ROE and ROCE metrics, very solid. You look at those numbers and you'll agree with me that it's a thumbs up. But shareholding pattern.
Shareholding pattern after now the company marked its listing in December 23. So from there onwards, we've not seen a particular change in where the promoter holding is concerned. It's remained very strong at the levels of 75%. If you talk about FIIs, now we've seen a pickup in terms of where the FII stake is concerned. So from what was in December 23 around the levels of 4.65% has moved upwards in the range of 6.9% is what we are seeing. DII is mainly stable around the mark of 6 to 7%. So overall, it's a good mix that we are looking at in terms of shareholding pattern as well.
Okay, so that's shareholding pattern. Let's talk about street cred. Stock's not done too much when you're looking at the last 1 year and the year-to-date numbers. But since listing, it's up around 28%. So a decent kind of uptick. But would you say that they've left money on the table for investors? Doesn't look like it, right?
Right.
Especially since December 23. Stock is up just about 25 to 28%. So that's how we look at it. We'll give this a neutral because we'll want to wait and watch as to how performance continues. You want to take the outlook?
Yeah, so if you talk about the outlook forward now, see, in FY25, what we saw is about a 16% of a growth. They've given us projections for the year forward, that's FY26. Revenue is expected to see about a 18 to 20% of a growth here. EBITDA margins also majorly in line with what the historic trends have been in the mark of 22% or 24% of an odd is what we are seeing. PAT margins again at the mark of 15 to 18%. Now, if you break down the segments for you, now industrial gas segment is interesting, 16 to 18% is the growth expected here. LNG now that has seen, if you take that segment into consideration, that is expected to see about a 20% of a growth. But as Harsh was talking about it in the beginning, it's the beer keg division which is interesting. Now, the Inox sold about 50,000 units in FY25. They currently have a pipeline of around 3 lakh to 4 lakh. So that's almost a 6 times of a jump that we are looking at for FY26. Now, with some of those approvals, some issues which were there in FY25 now subsiding, interesting to see what's the kind of growth that they expect from this division. So overall, even in terms of outlook forward, the guidance that the company has given is mainly on the consistent side is what we are seeing, right, Harsh?
Well, yes, it seems like. Let's quickly look at how the valuation stacks up for this, and we'll reverse engineer this a little bit. So market cap currently at 10,600 crore. The FY25 numbers versus FY26 estimates and FY27 estimates. What we've done is we've estimated a sales growth of roughly 18 odd %. 1,300 crore is what they've done in FY25. The estimate for FY26 expected to be around the 1,550 crore, and the FY27 estimate expected at around 1,800 crore. What's the downside risk to that? We'll have to wait and watch, but we'll talk about valuations till then. The EBITDA margins we've expected around the 21 odd % mark, and the PAT margin expected at around 17%. That's how your MCAP to EBITDA works out, and that's how your price to earnings ratio also works out. So 35 times FY27, certainly not looking cheap. Something to be watched will be the execution part. How well can the group continue to execute? See, they've done very well. That there's no doubt on. The last 5-year data seems to suggest that it's a strong set of numbers that they consistently post. But can that sustain will be the question. Let me bring in Mr. Siddharth Jain. And actually, let's quickly also have the KYC ratings while we are at it. But let me bring in Siddharth Jain, promoter and director at Inox Group, to talk to us about Inox India and what to expect from the numbers going forward. First off, Siddharth, good speaking with you. Thanks for coming in. I want to first talk about the beer kegs business. There was plenty of anticipation in FY25. FY26 also, in terms of expected numbers, there's plenty of anticipation. Talk to us about what's the likelihood of these orders translating. That's the first part of my question. Second part, you're building in 18 to 20% growth. How much of this comes from beer kegs? What are you anticipating in terms of numbers?
Good morning, everybody. Hi, Harsh. First of all, thank you for having me on your show. And
absolute pleasure.
I was hearing your commentary for the past 5 minutes, and I'm extremely impressed with the in-depth analysis that you've done about the company and how you've presented it to your viewers. So thank you. I think you've done a much better job than I could have.
Thank you so much, sir. An appreciation coming from the promoter.